Hey everyone, Realtor Josh Kepke here with your monthly update for the Greater Vancouver real estate market. Let's look at what May 2021 brought us. The cooling continues. For the second straight month, housing sales have slowed across Greater Vancouver. As the economy reopens, we fully expect real estate shopping to be less of a priority. We're seeing slowing sales, more inventory, and fewer offers. Home sales, when compared to last May during the start of the pandemic, were up 185%. However, when we zoom out, we can see that this was only the sixth strongest May over the past 20 years. So meanwhile, new listings remain elevated and they're surged 93% from last year, coming in at the second strongest over the past 20 years. Prices, as measured by the home price index, will continue to trend higher in the coming months, but again, this is a lagging indicator. The reality is, if you're selling a house today, you're probably not getting as much as you would have back in February or March when the inventory was in short supply. Moving forward, the housing market is still in good shape, so don't worry, but it will undergo a stress test, literally and figuratively. The increased mortgage stress test is now in place, reducing borrowing power by 4.5%. Further, year-over-year base effects will get hard to beat from July onward. What I mean is that this is almost a certainty that home sales will decline on a year-over-year basis from July through to December. In summary, a much-needed cooling appears to be underway. However, monetary policy remains accommodative and government policy will likely remain favorable for the rest of the year when you consider that residential investment was responsible for 54% of the GDP growth in the first quarter. Housing continues to be the pillar for the economic recovery plan. Now let's talk about the detached market. The detached market has been responsible for the majority of the strength in the housing market. While sales were 163% up from last year due to the weak base effects, they were ultimately right in line with the 20-year average for the month. Sales are slowing, but so too are the new listings. Keep in mind, this is part of a seasonal trend as housing activity typically always slows heading into the summer months. New listings were up 114% from last year, but they have contracted for 2 consecutive months. What's most important here is that the months of inventory for sale is growing, and that is releasing pressure on the housing market. This is encouraging news for buyers as the months of inventory has grown from 2 in March to 3.4 in May. We reached a balanced market when we're at 4 months of supply. So while inventory conditions are improving, things remain incredibly tight in the 2 million and under detached housing market. Months of inventory for sale sits at just 2.2. However, that's up from a record low of 1.3 in March. As inventory slowly recovers, it's beginning to ease the number of bidding wars. Back in February and March, it wouldn't be uncommon to see a house get 7 to 8 offers, for example. Today, a similar house is fetching around 2 to 3 offers. Still competitive, but less of a frenzy. This is showing up in the percentage of listings sold above the asking price, which slipped down to 49% in May. Still half of the listings though. This takes us to prices. While the recent increase in inventory is helping to ease price growth, the home price index continues to march higher. The HPI for Greater Vancouver detached homes is now up 23% from last year. Similar to my comments in last month's report, the detached market has arguably peaked for this cycle. However, it remains a seller's market and buyers can still expect competition on houses, particularly at the entry levels. Now for the condo market. Greater Vancouver condo sales had a massive jump, growing 212% from last May due to weak base effects. Even without the weak base effects, this was still the second best month for condos in the last 20 years. This was another huge month for new listings, setting a new record for the month of May with over 3,000 new condo listings. So we really have strong sales and record new listings. What does this all mean? Months of inventory for sale helps us cut through the noise. And so there is just 2.3 months of inventory for sale in the condo market, and that is indicative of a seller's market. We are going to need a lot more inventory to slow condo price growth, which is now playing catch up with the detached and townhome markets. Condo prices are up 7% year over year, but still lagging the rest of the market. One thing that might ultimately keep condo prices from catching up is the number of new condos under construction. These condos will eventually complete, and then a chunk of them will land on the resale market. This is worth keeping an eye on in the next couple of years. For now, the condo market remains very strong, and based on the current inventory levels, higher prices seem inevitable in the very near term. And in case you missed it, again, the revised mortgage stress test is now in effect, reducing borrowing power by about 4.5%. Policymakers are likely done for now, but all eyes are on the Bank of Canada as they try to rein in this stimulus. So that's it for your monthly market update. We just talked about the month that was May 2021. Be sure to follow me on Instagram at Josh Kepke. Follow us on Facebook, Vancouver Real Estate Today, and on YouTube as Vancouver Real Estate Today as well. And reach out to me with any questions or comments. You can also put those below. My phone number, 604-313-9805. Otherwise, I'm going to be off from June 12th to June 29th as I'm getting married and going on a honeymoon as soon as those restrictions let up. So have a great summer. I'll look forward to speaking to you soon in July. Take good care.